Hey there, this is Coach Mike. We're going to go over our focus group watch list of stocks. Going to start here with Apple. Into that last run, I had a few different upper Fibonacci targets. We actually took one of them out, and we got real close and kind of looking like we might pull back from another one. In all honesty, at this point, I don't have a lot of interest in entering a new long trade for a swing on Apple. I truly believe that it's a little bit overdrawn. And ironically enough, we kind of saw this same similar pattern. If you look with the consistency of up days, the evening star pattern popping out of that, another red day. I want you to look at right here. We had the move up, the evening star pattern that didn't continue. It popped out a red day, followed by what started out looking like it would continue downwards but popped up higher. I say this because I believe that we could see the futures open a little bit down tomorrow, but then some of the news about Apple's new payment wallet system with Visa, MasterCard, and American Express could cause a bit of a pop. Might even gap that following day, to which would be Wednesday, and maybe then replicate this pattern. That type of move is not worth me trading. So I won't be looking for a trade on that. I'll be looking to see if we don't break this prior high and continue pulling back, if we could maybe see a puts play on. You could still play the 97.50 puts for September 20th with a 96.74 target. I think the 99 puts would be a little more in your favor, but the 97.50s would be potential there still. And even if it made an up day, I don't expect it to continue too much more. I'm not going to make a swing trade for something that's already run so much, because stocks don't go straight up forever. Even Apple. Caterpillar, last week I didn't think it would break above this gap fill, but what it did, it had an M pattern here on the daily chart, and it went up and held to the center of this M. If Caterpillar starts pulling back on Tuesday and continues downwards, what I'd look at on Caterpillar is two potential puts trades. The first one would be for a shorter term, higher range of volatility in the September 20th 108 puts, with a target area right around this consolidation in that range of about 105. That could get you a quick burst of the volatility, make you some money. I also like the October 18th 105 puts, which takes you in the money on a break below this line, after what would then be, if should it pull back, it would then be a definite lower high from that earnings debacle and gap down. Plus you've got this big run that's happened, and even though Caterpillar's made some big runs before, it's about at the same time frame we were to this point, which didn't get much continuation afterwards before ending up to make a pretty hefty fall. So I think you have a little bit in your favor. Not to mention, at this point in time, you didn't have the fundamental change. What fundamental change? Well, even though they beat on their EPS, their earnings per share estimates here, they lowered their guidance, meaning they told Wall Street, we believe we're going to make less money next time than what we originally planned. And because the earnings kind of can give you a reward for what you traded for, we're trading really for the future and the future performance of a stock. And because they told the world, we expect to do worse than what we had originally planned and what you were already investing for, we could see this start to make some lower highs until we get into the next quarter's earnings. So I'd be watching for a little bit of a pullback on Caterpillar, see if it gives you that type of move to get down to 105 for your September puts, and down in the $100 range really into October. CVX kind of got me after waiting for a couple weeks for it to hit a point and pull back. It did just that. It hit the perfect price I was looking for. Started to pull back, consolidated there for a few days, and then Friday popped up. Well, I've been saying that until it broke above this green line right here, I wouldn't really have an interest in trading any type of swing. Now, looking at CVX, I don't think it has much upside potential. So if I'm going to make a swing, I need to use this green line here as my support and look at the September 20th 130 calls with that 131.65 target. Facebook, we were looking really pretty on Facebook, and then Wednesday happened and we saw a downgrade on the stock. Now, it did fall pretty hard, and it's made some of that back up on Friday, and we could see some continuation. But at this point in time, I am not interested on any swing between these two lines on Facebook. You get in a really tight range. The open from the earnings gap up is the exact same price, $75.96, that our highest close was since. I just drew a horizontal line there, and I started to develop a bit of an ascending triangle. And until it breaks above that ascending triangle and closes a day up there, I'm not going to be looking at any swings on Facebook. So I have it listed on the focus group spreadsheet for no new trade. But we do see with our 60-minute chart that if we were able to continue to hold this swing low that we also consolidated on top of, which would be 74.62, we've got maybe a little bit of a potential to break above 75.18 and then could see a gap fill. So I will be kind of watching this. What I'd really like is to get this gap refilled, which I know that means it would have to pull back some. But if we got that one out of the way, I think we'd have a little bit more security, and then we could even see like a W pattern possibly set up if we were to double bottom down here and come up and break out. It would make the pattern a lot stronger to make that same trade I'm discussing. So if we continue upwards on Facebook Monday and you want to make a trade off the 60-minute chart, remember you'd be trading September 12th. You'd want the 2 weeks instead of trading the weeklies, the same week expiration. You want to watch at first your 75.18 target, and then you're going to be looking around 76 or so. But what I would want to caution you to look for really is trading 2 weeks out. You could at least go with, I would say, the 76 calls. You don't have to play the 75s just because it might hit 75.20 and pull back. If it did that, it'd probably do that in one day, and you could still make a little bit of money seeing the pullback and still selling. But that'll be something I'm watching for on Tuesday with Facebook. First Solar, FSLR, we had the W break on the focus group spreadsheet. This was our target area for it. That's where it hit and pulled back from. Now it gapped down, it came back and refilled the gap Friday. So, if it pulled back more, I'm still expecting that the only place I'd want to buy it is on the retest of that W. And W patterns retest enough that I'd be confident buying there. But I do also realize that if it made a bit of an up move and broke above this line, you could see more upside potential, maybe even to that 75.46 target we had. So the way I would look to trade this personally is until a close above this line here, which is about 71.50, I wouldn't be looking for a new entry in a long trade. And because it's only about a $3 or so drop, about a $4 drop, you've got to look at that W trade as you want to establish yourself the best possible risk to reward. And what that's going to be is you've got to use this gap fill, this line right here, at the value of $70 even, as your stop. Any close above $70 would stop you out of a puts trade that you would just be trading for the retest of that W. Now, obviously, it could fall farther, but the retest of the W, I think, is the more likely trade. And even if it could still fall further, you'd want to be using that retest as a bullish argument if you're in a bearish trade for where you have to identify that it could likely bounce. Now, that is a $4 drop. I didn't put the trade on the spreadsheet because it's going to be a little bit pricey to trade that one, because you're going to have to trade 67.50 puts if you're doing that. And, solar stocks, they can turn around and start ripping and rearing quicker than anything you ever seen. They almost trade like a biotech in a sense of the volatility that you can see in the solar sector. So for FSLR, I think the safer trade is to let it fall, retest the center of that W, and trade the bounce from it. If you wanted to short into that, $70, any daily close above $70 is your stop. GLD, we've talked for a while about this horizontal channel and trading 2 to 3 months out on a strangle of 126 calls and 122 puts. You're sitting dead center as of Friday's close in the middle of that horizontal channel. I would prefer you do the 3 month out trade, and anytime it re-enters this, gets about into the center of that channel, you go another 3 months from that point. Because what we found over time is giving yourself the 3 months has all but one time allowed you to profit still on both sides of that trade. The calls and the puts can end up making you money. So give yourself the time to do that. You're dead center in it. I would look at it again, but I will say this. If it fails to break below this line that I've got marked since, December 31st, the higher low here, if it fails to break that trend line, we might have to change what we look at with that strangle trade, simply because we may not be expecting in the future to ever break below that horizontal line. You see, here by next week, this ascending trend line will actually exceed the value by September 8th, September 9th of that bottom horizontal channel. So for right now, if you're trading GLD, there's other trades to be made on GLD if you watch the training videos, but this is one that we consistently go over that is, this is a no-brainer trade. It just happens so frequently that you can just bank that you won't lose money. I can't guarantee that, because I guess it could go flat, but trading out at least 2 to 3 months, especially that 3 months, gives you that ability where all but one time you made money on both sides of the trade. And even that one time where one side lost, you made so much on this winning side that it didn't matter you lost on the losing side. So be looking at that. I think that's a trade that I'm personally interested in making come Tuesday. Remember, the GLD daily chart is a gappy chart, a gap happy chart. GLD as a commodity trades 24/7. So there's a lot of things that factor into the price. You can't let yourself so much be affected by those gaps. You've got to trade an overall trend and direction. And I also like using channels to trade on the 60-minute chart for GLD. So if you want to start looking at that, I wouldn't be surprised coming into the autumn and into the U.S. elections in November, the presidential elections, that we see some more volatility in the physical metals. GS, Goldman Sachs. I was really actually surprised with Friday's up move, and I don't know how much I trust it, to be quite honest with you. I have a few potential trades on there. The 2 calls trades are still based on the 183.97 target that we had on the bounce here, and that potential puts trade is considering not breaking above this high that we made at 179.86 to that 170.40 target. So we need to see where we really trade on Tuesday. I don't think you'll miss out of much of the puts trade if you let Tuesday happen and see if it's a down day. I don't think you're going to miss out on much of the calls trade if we at least wait to see if it breaks 179.86. Personally, though, I'd prefer getting a little more firm trading action to validate buying any more calls. I didn't take that last call swing clear to the target, but we had a heck of a percentage gain on it, and I don't want to be just throwing that back at it and giving it away. So I want to be watching this really closely over the next couple trading days. Lockheed Martin, we took a call swing. We had our target area. We came just a few pennies off of it. Started looking at the short trade, and it actually helped us out. It gapped down some into our short trade, and I still think we've got downside potential left, I think we can get back off of this trend line. Now I want you to look at another down move it made. It had a couple days consolidation, gap down, even gap down a little bit this day. Had it was a green candle just because it closed higher than it opened, but it was a down day overall. And then it kind of had just what ended up looking like a couple day up move before it fell again. That can be pretty typical of Lockheed Martin. You see here, you had a down, and up, a down, even a decent up before it finished the down move. And if we do see that, if we did get a little bit of a green day, I don't think you need to be freaked out on Lockheed Martin. It trades very, very consistently. You go back through several years worth of Lockheed Martin chart, you're going to see a lot of consistency with several different trading systems. Running your trend lines, your Fibonacci extensions, even your 36 and 50 simple moving average on your daily chart. And everything right now tells me there's a good potential after hitting my target that we get the pullback into that 168.35 area. So I'm going to stick with that and stick with that trade, and I won't look for a calls trade until it makes that pullback. Because quite frankly, these little times where some people think that, just because it made a green candle, it's reversing, and they can't look past. For some reason, some people can't look past what it's doing right now on this given trading day, whatever trading day that would be. They can't look past that, and they can't look and realize that one green day might not affect an overall trend. And when you're swing trading one of those overall trending moves. And right now, I think because of that gap down, we might see a little bit of an up move, but that the trade wouldn't be over because the target is still there, and we very frequently hit our targets on Lockheed Martin. UPS made a decent pullback after that little, really is just kind of a dead cat bounce run. There has been some fundamental changes, but if you were to continue upwards on Tuesday, I think you could at least be trading for this open from the gap down, because what you would have if you continued up is you would then have a low or a higher low, and that higher low I think could be worth trading. I would trade it a little cautiously. I wouldn't have aspirations of a gap fill target, but I wouldn't sell right away just because it hits this line here, that 99.58 I have on the spreadsheet. I would allow it to hit that and show me it was going to pull back from it. I would take the chance that maybe it could fill this gap, because we've seen others do that even when they've had those fundamental changes. We just saw Caterpillar do it. And I think that UPS might be worth making that trade. I would go with the October 18th $100 calls, even though they wouldn't go in the money at this 99.58. But personally, I think if it's going to hit the 99.58, it's going to hit it within a couple weeks at the most. And if it hit it within a couple weeks at the most, well, then if you were taking like September calls and took like a 98 or 97.50 call, you'd be fine on that. But having that full extra month won't hurt you. That won't go in the money should it not break above that. There'll still be money to be made there, because I think that line, if it's going to hit, would do so in the next couple weeks. And because you've got a bit of a morning star here, even though you got this gap fill here, you could decide to use the gap fill as your stop point, any close below 96.85. But the morning star pattern, I would use the low of the morning star, 96.94, as my stop. There's only about a 10-cent difference there, though, so you might decide you're okay using the gap fill point, just to eliminate the potential at that argument that, it fell, I stopped out at 96.94 and it bounced off 96.85. So if you wanted to use that, that'd be fine, but I would be cautious of this trade. And finally, Visa. I had another Fibonacci extension set, which the 50% line was right about 217. So it basically hit that, pulled back from it. I do have some concerns because Visa did have those fundamental changes. Now, personally, I'd be kind of watching Visa, because I don't know that it falls all the way to this 202.36 target. I wouldn't be surprised to see it maybe bounce off the 210. We've got some support in that range that we saw, this big fall that it had here, bounced right off of that same price. So I'd kind of be watching that, almost to the point where if you're going to trade it, I would let it fail at first. Even though, that's $2.50 into that potential trade. But I would be more worried that it could just bounce off and horizontally trade here, which would hurt you a little more. So for Visa, if it were me personally looking for a puts trade, it would have to close a day below the 210.18, and then I'd trade for that 202.36 target. So just a quick overview and run through of our focus group charts. We seen a lot of things that have run since that last market bottom, and that does pose some caution for the probability of new trade entries. Not only did we just see strong runs that we can try to guess a pullback point on a strong run, but in reality, if it did pull back, it could just turn around and bounce anywhere and continue that run. But we also have to look at the fact that on those big runs, if you weren't in trades already, you missed a lot of that big run. So it might be better to kind of, with this holiday week coming up, it's only a 4-day trading week. We're only open Tuesday through Friday. It might be a little better to kind of go a little bit easy, not force anything this week. See the moves that come from it. If it ekes out the last little bit of an up move, I don't think there's much upside potential before, I wouldn't say like the type of pullback we just had, but before a decent enough pullback to give you a higher probability chance on your next long entry. So, I wouldn't force things this week. Let's watch and let things develop. Let's see how the volume does if we start to get the volume increases, because being the holiday week, some people might still be out this week and come back for a full week. So, a little bit of caution. I think trading off your 60-minute charts for this week is going to be your best bet. And aside from that, best of luck with the week of trading. Join me in chat. I'll be there every day this week. And look forward to another good week.